This is companies in one of the strongest positions in the restaurant industry. They've got a great value proposition. More than 70% of their transactions happen at the drive-through. And overall, corporate and franchisee financial health is very strong. And they won't be the only one to consider pausing their reopening plans. To be honest, the recovery in the restaurant industry wasn't going to be a straight line. It was going to have lots of ups and downs. And I think McDonald's is just the first to make this announcement.
Right, that's true. I mean, by making it first, they could lose some market share, but as you say, they could also be kind of giving everybody cover for making the same decision. Kate, I'm curious about the shift overall that we might be seeing here. The fast food players have been the strongest throughout coronavirus because they could keep those drive-thrus open. That was starting to shift. I mean, we had some nice rebounds off the lows for the restaurant, sort of the table stocks, as we'd call them. I wonder if we're going to see a little bit of a reversal of that now.
I think, Kelly, the players that have been the strongest throughout the pandemic, we name them all the time: Wingstop, best performer, Chipotle, Papa John's, and Domino's. And that's because they have these really robust carry-out and delivery systems that are already in place. As RJ mentioned, obviously McDonald's does a lot of business through the drive-thru, but it's the first major chain we're seeing say, hey, we're going to stop, we're going to pause and assess what this means. Back in March, we saw Starbucks do that. If you remember, they decided to close down, their in-store seating and dining, and then the rest of the industry kind of followed suit. I have a feeling we're going to see more of that and more bigger companies potentially putting things on hold as these case numbers continue to climb around the country.
Yep, and RJ, imagine we're still going to see a big macro effect from that, even though it's happening kind of company first instead of by the authorities. But I want to ask you about something that was big news yesterday and surprising to me. Pizza Hut's largest U.S. franchisee filed for Chapter 11 bankruptcy. Now, they're also a big Wendy's franchisee, but RJ, I thought that pizza delivery, granted Pizza Hut is dining rooms, I get it, but why Chapter 11? I mean, how did it get so bad for them?
Yeah, NPC International was in a challenging position even before any coronavirus regulations went into place. That was already a situation that the company was over-levered, to your point, had a lot more sit-down locations than the delivery carry-out model that we've seen from Domino's and Papa John's. So it was in a weak position financially. It was a weak position competitively. So no terrible surprise that NPC filed for bankruptcy. You're right. The QSR pizza category is on fire right now.
Yeah.
Most of the companies are going up north of 20% comparable store sales. But this was the underperformer, and to be honest, was dragging down results across the board for Yum Brands. This has got to be a positive. This is something where I think the company can shift close some of the weaker performing NPC locations, shift some of them to better performing locations, and really rethink about what consumers are looking for in the pizza category. Again, that delivery carry-out model that Kate referenced, that's what works right now. Pizza Hut doesn't need that. So I think this is a positive move, even if it takes some time to get them in the hands of the right operators.
Oh, that's super interesting. And that we're showing shares of Yum Brands, Wendy's as well, the way they might be able to work this to their benefit in the long run. Kate, especially since you're here, I want to ask about the employment effect of all of this. You have these companies starting to add workers back, getting ready to open those dining rooms, now putting that on pause. Like, it's the yo-yo that Tillman Fertitta was talking about yesterday, just this back and forth. What happens to those workers now?
Yeah, that's a great question, Kelly. So we're still millions below pre-pandemic levels when it comes to actual restaurant employment. And the National Restaurant Association said from March through May, 8 million jobs were either lost or workers were put on furlough. So it's going to have a huge effect. But remember, we've seen a lot of big hiring announcements from McDonald's, from Taco Bell, from Papa John's and Domino's throughout the pandemic and moving into the summer, because some of these players that had the delivery, drive-through, carry-out options were doing better than most. McDonald's had the biggest hiring announcement, though, of 250,000 workers as it begins to reopen dining rooms. A lot of the franchisees will do that hiring, but whether or not this puts their plans on hold obviously remains to be seen.
Yeah, absolutely. RJ, run us through, if you can, the space and how, where you think investors should put their money. Starbucks is your top pick. Who else do you like? Who should people stay away from?
Yeah, I like Starbucks just because, and the way to think about this category right now from an investment standpoint are not only the winners, but how the winners are going to take shape and which categories are going to be the most distressed coming out of this environment. Obviously, it's no surprise that the sit-down restaurants, casual dining, fine dining are going to be disrupted. So in a space like that, I'd look at a player like Darden, which has the financial assets, has a wide portfolio of names. Starbucks is an interesting name just because, as Kate referenced, they've had to reclose.